Hello and welcome everyone to Gold Asset of the Day for the 24th of August 2022, presented by myself, Phil Carr, at the Gold and Silver Club. So we've currently got Brent crude oil breaking back above $100 per barrel so far this week. It is up 6%. We've just actually taken the opportunity to lock in another 400 points with our clients at the Gold and Silver Club, which makes the total this week that we've banked on Brent crude oil 1,200 points profit. Alongside that, we've also seen the US dollar slingshot and have the strongest 1 week performance since April of 2020. If you go back and watch our week ahead commodity report, we talked you through the opportunities here on the energies to build back in at the swing lows. Expect a slingshot move higher between now and the end of August and capitalize on dollar strength here as well. So the dollar index actually has now hit our profit target at the 109 level. That's delivered ourselves and our clients at the Gold and Silver Club 385 points profit. So it's only Wednesday right now. We've already banked over 1,200 points on Brent crude oil and 385 points on the US dollar. And now we're starting to see copper break back out to swing highs as well. It's breaking above 7-week highs. We're looking to scale out of more profit on this market too. And as we discussed with you last week and over the weekend, we're looking for lower prices with the metals such as gold, silver, platinum between now and moving into the month of September to reaccumulate at lower prices. So let's then move over to the hedge fund data in the last week. So we have seen gold yet again in the last week. We've seen a trimming of net long positions from hedge funds and money managers. They've continued to liquidate their overall net long position, not by a huge amount, but enough to see gold prices. They've pulled back over 500 points in the last week. We broke out to $1,800 per ounce off the back of the CPI data just 2 weeks ago, in fact, where gold prices, they broke out to 1807. We locked in over 2,000 points profit over 2 trades when we had that breakout to the upside. We then went long the dollar after that news item. Subsequently, gold has broken all the way back down towards 1730s, and the US dollar, of course, has broken all the way back out to 20-year highs versus the euro. The euro has now broken that parity with the dollar, where we've essentially lost that peg. And at the moment, we're seeing the euro under pressure after it broke parity with the US dollar, which sets up nicely for later on in the week when we have the Jackson Hole Symposium. All eyes will, of course, be on Jerome Powell and the statement and the expectations for September interest rate hike as well, whether the Fed is going to go ahead with a supersized hawkish interest rate hike of 100 basis points is going to be on everyone's minds going into that later on this week. So as far as it concerns gold over the course of this week so far, expectation is that we can move a bit more range bound here. So far, we've found support down at the 1725, 1730 level. And of course, I'm looking for a bit more range bound price action. We found support coming back to 1745, 1750. I'm not expecting a huge rally from these levels where we are at the moment. We may see a little bit more upside. We do still have our lower trades running on gold, where we have banked 75% of those trades. We have the lower positions running at the moment. So just in case gold does have another breakout back towards the 1780, 1800 zones, we will be able to benefit, but I'm not expecting that over the course of this week. I think it's more likely we're going to see more range-bound consolidation for gold. And as we move into September, if we break down yet again, come back down towards the swing lows, those would be great opportunities, in my opinion, to look at reaccumulating at much lower prices. And of course, going back to the energy report last week, we discussed with you in detail natural gas prices. They've broken out to all-time highs in the UK and Europe, and of course above 14-year highs in the USA. Typically, when natural gas prices break out like this, you will have a bit of a lag, and then oil will subsequently break out afterwards as well. We've seen that absolutely so far this week with Brent crude oil from the lows of Monday to the highs on Wednesday. So far, it's broken out over 700 points within just 2 sessions. Very quick trades for you to capitalize on. I've mentioned it before, but it's not a buy and hold market right now. It's a trader's market where week to week, you can easily be banking 1,000, 2,000 points on commodities, especially on the energies at the moment, on natural gas, on Brent crude oil, WTI crude oil. They're providing fantastic opportunities, which we continue to walk you through each week, the opportunities on those markets. I do hope that many of you have capitalized on oil this week. If you missed the week ahead report, feel free to go and watch that, where we've talked about opportunities to buy back in at the swing lows and capitalize on this slingshot move higher that we've seen so far over the course of this week, which has enabled us to bank 1,200 points so far on oil, where we have 4 positions right now. And we've also hit target on the US dollar for 385 points. And we took the opportunity on Friday as well to scale out of another 500 points profit on gold with our clients at the Gold and Silver Club. We could see that it was on track to pull back further, so we took the opportunity to make sure we were locking in more profits on Friday before the close there as well. So if you're not making money at the moment, you absolutely should be. There's just been so many opportunities to capitalize on this market volatility with commodities right now. I can only imagine that potentially you're either inexperienced in the market or you're using outdated technical analysis or gimmicky technical indicators, which just will not work in 2022. The age of data, where you want to be utilizing statistics, data, market intelligence, further align that with the daily, the monthly, the weekly, the quarterly cycles for each commodity, the intermarket correlations, the ratios in the market, alongside the capital flows, the key areas of liquidity, and of course, learning and understanding the narratives in the market, the macroeconomics, the fundamentals, the geopolitics, and then further compounding that with understanding and knowledge of how the hedge funds, money managers, banks, and institutions are positioned in the market. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.